Hi everyone. Hi, this is Souradeep here. Very good evening to all of you. Can you please confirm me that if you can hear my voice and see my screen properly? Can you please let me know this thing? Am I audible to all of you? Yes, great. So just now the data has come and I was waiting for this data. This was the second most important data before the Fed policy, that is on 27th of July, right? Now, this is these are the data that the job creation, that is the non-farm payroll data. Okay, where is it? Non-farm payrolls. Okay, so you can see the non-farm payroll numbers have been quite good. Okay, so as Federal Reserve was raising the interest rates, there were fear that it can hit the job creations in the USA. But as we can see that the hourly earnings have grown better than expectation. Okay, and if you can see the job creation, that is at 3,72,000, which is quite comparable to the last month. And overall, if you can see that the expectation what it was there, it the job creation has been better than expected. Even in Canada, if you can see the unemployment rate has reduced. So that means there is uh, quite a good amount of job being created. And here you can see that uh, these are the expectation. These numbers are expectations. So you can see unemployment rate in Canada is better than expected, and unemployment rate that was in 3.6% in USA, it has remained there, and job creation has been robust. So US data, what they have come has come very strong in the last week, 1 week. The PMI data, the uh, business activity data. So, and that is why the you can see the US dollar is having a smooth run, and US dollar has been doing really good because euro as a currency has been really doing bad because the data from the that is coming from the Europe is not that good, and that is why you can see right now that in spite of the Fed hiking rate, there has been no effect on the US economy, adverse effect on the US economy. And what happened is that uh, because the dollar was going up, so everybody expected market to fall. But if I look at the recent relative strength of the market, this is the relative movement of all the indices, right? Now, if you see in the last 15-20 days, what has happened is that Nifty and Bank Nifty and US 100 is Nasdaq. These have been one of the best performing indices globally because what has happened is that due to the high increase of the dollar index, crude oil has come down a lot, like from a level of 124, 125 in the crude oil. If you can see here, has uh, come down to a level of 100 and 102. So this has been a great relief for market because 100 is still a doable number, but and due to this surge in dollar, the crude oil has fallen, and that is why if you can see the global market and especially India and USA have done very well because US data is strong. US is not and money flowing into US dollar. US has done well, but Nifty and Bank Nifty has been one of the best performing indices in the last 15-20 days because India imports almost 85% of global oil. Out of that 25%, India is now importing from Russia at $60, $70 level, and the rest at 100, 105, 110. But as the crude oil fell from the recent high of 112, 13, what happened is that our market started outperforming the global peers. If you can see the Nikkei, the IBOV is the Brazilian index, the European index. Europe is doing really badly, but the all the Asian indices are doing much worse, and India has been doing great. If we look at the Nifty, you can see it has crossed this falling trend line today, though it closed near it, and there is a possibility that what was going on right like this, that we can see quite higher level also if this continues. I'm not saying that it will surely happen, but if Nifty stays above 16,180, 190, where there was a gap created, we can see a substantial good amount of rally in the Nifty. Uh, the rally may continue next week, okay, towards 16,800. Just a second, got a call, need to cut it down. Yes. So it can go towards the 16,800. If it stays above 16,200, it can go towards 16,800 before possibly again falling as we approach 2027 July. So next week Nifty can go up and then come down. For next week, if Nifty sustains below uh, 16,150, then we have to look for trades on the shorter side. But I have a feeling that given the overall growth trajectory in India is doing really good, because though the global situation is bad, if we saw the PMI, that is the, if I show you this week data, okay, this week data, if you see Indian PMI that came here, mm, just a second. There is Indian flag. See, Indian PMI were 59.2. So India is doing great in spite of this global uh, commodity price rise that was happening. India was really doing great, and that is why Indian PMI, as you can see, was 59.2, right? As I showed you. And India is doing really great. Only thing that is a little bit doing bad for India is the forex reserve. Okay, so if I the forex reserve data has come today only. If I see that forex reserve have again declined, uh, this is the forex reserve data. So if I see only 1 year chart, so you can see that we are at the lowest level in probably since last November. Okay, so since last November, when the peak was created, since then we are at the lowest level. And if we go back in the past also, we will see possibly we are lowest level in, so 589. So last May we saw this kind of level, we are below that. Okay, but in between it had gone up and have declined. This is the one bad factor that uh, Indian currency reserve is going on. These are the macro things. To talk a little bit about macro things more, if you can see, the wheat prices have started coming down. The corn prices have started coming down. They are elevated. They are certainly elevated, but the trajectory is down, and possibly Fed will do a 50 to 75 basis point rate hike again on 27th of July, and possibly these prices will fall again. If I talk about the metal prices, you will see the metal prices have significantly corrected from the top, like from zinc 384 276. Okay, so 30% correction for lead, you can see from 196 to 174, 10-12% correction. But if you can see the iron ore from 218 to 112, almost it, you can say 40-50% correction. Copper, which is from $5, it has come down to 3.34, so again 30-35% correction. Aluminium, which is very widely used, from 324 to 200. So you can understand that most metals have seen, and crude oil has also seen 20-25% correction from the peak, and most metal have seen 30 to 40% correction. So the rate hikes procedures that the Fed is doing is acting, and inflation is coming down. And because Indian economy is not slowing down, India is really doing good. So next week, look at this. If Nifty stays above 16,200, try to play from the long side. If Nifty tries to be on the lower than 16,150, try to play for 15,800, 850. Okay, 300 point on the downside, and on the upside, it can be 5, 600 points next week. Okay, try to look at this. Okay, now I will go to the Bank Nifty. See, Bank Nifty had breached this gap of 34,500. You can see it is moving up. Our next logical target is 36,000. Okay. Now, how to play it? Simply put, you can, if you are going long somewhere, today's low can be your stop loss for going long next week. Okay, so today's low is around 35,000, so you can try to go long with a 35,000 stop loss for a target of around 36,000 for next week. I think after hitting this 35, 36,000, these things will again start cooling down, because what will happen is that uh, as as prices start cooling down, as we approach the Fed meet on 27th, we can see again a fall towards this level, 33,000, 33,400. And Nifty, possibly Nifty is not that strong as Bank Nifty. It is strong, but possibly Nifty will again fall towards this 15,600, 700, towards the monetary policy. But uh, there is a chance, and there is a serious chance, that the kind of down move we were witnessing for several months from the October last, possibly coming to an end. There is a good possibility here, because if the crude oil stays lower, and that is why we have started giving the buy ideas. So if I go here, and we have started sharing many good buy ideas. So I will talk about them only. So this was one stock. This did quite well today. Okay, so I'm expanding this. I have already shared the idea with the StockEdge Club. This is a StockEdge social platform. So you can see that this is the Tata Chemicals weekly chart. It is near support, and possibly can go towards 1050 level. Okay, so this is one stock. Please uh, keep an eye on this. Okay, next stock I will discuss is the Siemens that I discussed. UPL is another stock. If you look at the UPL chart, uh, you can see uh, 614 is a good support. It can go towards 850 odd levels. UPL. Okay. Uh, so I shared many stock ideas recently. I will show them only because quite lucrative to me. Like Siemens, as I said, that Siemens can go towards 2881. Discussed about the breakout in the Siemens. It can go, because see, all these raw material prices are coming down, and as the raw material prices are coming down, all these companies like Tata Chemicals, UPL, uh, if you talk about Siemens, so metal prices, all these things are coming down. They are looking good. And if the raw material prices come down, you can see the Oberoi reality, if it sustains above 790, 795, can go towards this 1050 level, have corrected 30-35% in this correction. Okay, very good stock. Oberoi reality is one. Another one is Asian Paints. If oil sustains below 100, Asian Paints can be a very good. No, this is Shobha. So if Shobha sustains above 650, can go to 820, 823. I shared Asian Paints also. So I will show you. Uh, Tata Motors also can break out if it sustains above 440, can go towards 540. So all the auto stocks have done very well. This is being a global focus stock has not done great. Now this is breaking above this level. So this has the potential to go up. If we see the relative chart, uh, just a second. If we see the relative chart, you will find, just a second, I have this open. Yeah. So if you can see FMCG, auto, banking, realty, all these domestic focused things are going up rather than IT and metals and commodities, which are global focused. Okay, all the domestic focused sectors are going up because India as a standalone doing good as an oasis. Okay, so that is one point. Okay, so coming back to the stocks, uh, yeah. So was discussing about Nifty Bank. 35,100 can be a resistance. Above 35,100, 36,000 probable. Okay, Dabur, if it stays above, as we have discussed, Dabur, if it stays above 550, it can go higher. Uh, and Asian Paints. Okay, so last two stocks I will discuss, then hand over to the next speaker. So Asian Paints, you can see here, did if it sustains about 2950, because the oil prices are coming down, it can go up. And the final stock I will like to discuss is the Larsen and Toubro. Larsen and Toubro actually broke out today, uh, had a phenomenal day, but this kind of stocks, when they start going up, that can really go up a lot. So keep and watch if Larsen and Toubro stays above 1670. Larsen and Toubro can really go up because the commodity prices are going up. I'm sorry, I'm not able to take any question because, as you know, this is not a question answer session. We discuss our view, me, Vivek sir, and one of our guest speakers. So I will like to hand it over to my next speaker right now. Hi, sir. Welcome. And Agnish, please hand it over to uh, sir right now. Thank you.
Thank you, Souradeep. Thank you very much. One second, I'll share my screen now.
Yes,
Uh,
yes, sir.
I hope everything is visible now. I'm audible now.
Yes, sir, you are visible. Right.
Audible.
Yes, sir. Yes, sir. Yes, sir.
Thank you very much, Souradeep. Uh, Actually, I would like to
Welcome.
say every pardon.
I said welcome, sir.
Thank you.
I said welcome,
Uh,
sir.
Thank you very much. See, I wanted to first say sorry to every participant here in the session today because last week I failed to little because of the internet connection problems. So this time I would like to see more clarity and more upcoming trends in the markets now. See, last time I also discussed about RRG charts and some of the relative performances. And before going to the sector performances and relative rotation graphs, I'll emphasize of the market direction now. See, some of the insights I've given already by Sarudi. So I'll go little into the very little time frames. Okay. So now the everyone as expected last week, we already I told that the gap area will be filled next week. So that gap area is already filled now. This is the gap area is filled now, and it is above that gap area. That's in a positive side, and it is also above the 50 DMA. That is another positive side for the market now. And importantly, the RSI has moved above the 55 zone, which is also discussed in the last session. So that is the nothing but this previous swing high. Okay, so these are the positive aspects in the market. But there are also some one more positive thing is Nifty on a weekly chart closed above the previous high and above the gap area resistance. That is another positive market aspect for the market now. So before that, everyone is a positive thing. So what will be the, if at all market moves higher? So what will be the next targets? See, earlier swings, it didn't move above the 78.6 retracement level. So this time it is, we are already above the 61.8 percentage, and that is now not so far. It is about 16,334. That's the level we are looking at now. It may face resistance there and may get back to the field now. But there are certain negatives in the markets also. If you see this swing, right? This is a swing where there is some counter trend consolidation so happen. So that chart is to be like this. Okay, this is the in a 75-minute chart with a lower time frame. So this is the trend upside, and this is the counter trend, and this is the upside. Okay, now the Nifty has met the target of this consolidation and actually the extension targets now. So how we calculate that extension target now? So this is the three swing Fibonacci level. It exactly met the 100% of the target, pattern target. So this is the flag pole, and this is the flag. Okay, if you understand this, I think this is the most bullish pattern. Uh, if any pattern follower is there, though this is the bullish pattern. Okay, this flag has made the target here. Okay, flag pole is this much, that met 100% of the target. So this is the thing. So after meeting the 100% of the target, so it didn't move anywhere in intraday basis today. So two gap up openings and a shooting star in the first bar, but not moved anywhere. So this shows an exhaustion of a trend. Okay, even if you look at in the daily chart also, this is nothing but a open is high, right? Open is almost high, right? So this open is almost high, closing below the opening level with a long tail. This is a exhaustion, right? So the bulls are tired. At the same time, bears didn't get any time or any strength to pull down the market. So so this is another hanging man, you can say, or bearish belt hold, you can say, but this is the pure hanging man, but didn't fail to get any bearish confirmations. So this high is very important now. So I said earlier that 61.8% is the sorry, already met. So that is 16,178 is already met, which is also gap area resistance. Now the next level of the target is this one. So will it move? Will it reach this level? We don't know now, but the opening at any cost, market must open in a positive territory on Monday. Okay, and close on a positive manner. So that is the indication of moving higher further. So in fact, there is no bearish signs as of now, because there is no any negative divergences are, or any divergences are visible now. So there is no negative divergence. That's the reason we are very positive. But there are certain other things to be watched. Those are relative performances. Okay, the relative performance of the Nifty. Okay, which we have to see. See, this red line is relative strength ratio, and this green line is relative strength momentum. So both are below 100. That means that has to be picked up to the above 100 level. Then only we will be very bullish, and market turns to be very I mean optimistic level above the swing level. Okay, this is the prior swing. Now before that, it also moved 3.15% of the 20 DMA, right? This is the SMA 20, which is the price is above 3.17%. Earlier also, here also, all after moving around 2.5%, it was retraced back. So will that happen now again? We don't know now, but only thing is it is a caution for us because the extension from the price is too far away from the average. Generally, the 20 DMA acted as many times is it's a magnet of the market. So the magnet always pulls back or pulls down the from the price if it goes more than 3 to 4.5 percentages. See, if you look at this is the highest percentage, which is almost 6%. So that's the reason it came back again. Okay, and even in the downside also, if it moves above 6%, again it pulls back upside. So that's the reason anywhere between 3% to 6% is little extension of the average. At the same time, the if you look at the anchored VWAP, that blue line is placed at 16,000 uh, 331. That's where I am looking at the resistance because it acted as a resistance for the several times, right? Why I have anchored the VWAP here means this is the swing high, latest major swing high. So I have anchored this here. So it acted exactly resistances at several times. Okay, now that level is placed at 16,331. That's immediate important resistance level. So the second factor, if at all look at how do we find a support on based on the anchored VWAP. So this is the latest low which we placed it. 732 is the latest uh, support level to be sorry. 969 is a support level which is almost equivalent to the this day high. Okay, so now this is the caution now. See, these are the cautions for the market for the future trends because it extended 100% of the bullish flag and the lower time frame. At the same time, it formed in a bearish belt hold or a long tail candle, a bear candle, which is below the openish candle. So now, what are the? This is the my Nifty view for the next week. We are cautiously optimistic, but not bearish, not bullish. So be cautiously wait for an open on Monday, and then if it is open on a Monday with a little gap up, then look at the first hour behavior, then take a decision on the Nifty direction. Otherwise, I'm neutral on Nifty for now. For a bearish confirmation, it has to close below the today's low. The today's low is at 1557, 16157. A close below 157 will resume the downside move. That may have to close, that down move has to be downside below 15,969, which is anchored VWAP. At the same time, the 20 DMA, which is placed at here 725, almost equal levels, almost near to that level. So these are the two significant levels which we need to see. So even on the downside move, if you look at the 23% retracement levels, right? So that is also placed at 8,000, 15,807, 17, right? So this will be a first support for the this up move. So a close below this level and a close below 50 DMA, a close below anchored VWAP support, and 23% 6 DMA. These are many supports between this zone, this small zone. So look for them on the downside. Look for a positive close on Monday for a bullish side. That's my view on Nifty. Now we'll go to, I wanted to little elaborate on my, actually Mr. Souradeep has already explained about these performances because I don't want to explain again this the same chart. Now I'll go to uh, uh, DXY, which is actually last time when Vivek was there, I was discussing about the inverse relationship between DXY, dollar index, and the currency markets. That time I told that the dollar index will move up to 120 plus. The exact level it is moving higher. The move is very sharp now. Today's this current week, see look at this. The month's move is very sharp above 107. So that means our view on the dollar index is right. So see, look at that. So the sharp move in the last week. Look at this sharpest moves. So the counter trends is already engaged. So this upside move is staircase move. So dollar index, there is no respect to downfall. Please be positive on the dollar trade. Dollar will move further. So if the dollar index is moving higher, that means it is negative for the equities. So that's another caution for the equity markets. We forget this inverse relationship, then we may stuck in the market in a big. Uh, we may expect some sharper falls also. We don't know now. At the same time, there is relative strength which I have discussed last week. Uh, I think I will show that relative strength graph last week I've showed. See, last week I said IT will improve their relative momentum. At the same time, oil and gas will lose the momentum. That's what I said last week, right? So what happened this week is exactly happened. The oil and gas has lost its relative momentum and also relative strength also. At the same time, Nifty IT has picked up the momentum, moving higher. That means if at all it moves above the 100, it is going to be very positive thing. But today's TCS results were a little disappointing for because of the 5% decline in the net profit. This may not move into the improving quadrant. It may lose again a momentum, may come down this week because next week. So as we expected last week, uh, the metal index, which is also lost lot of momentum and very lowest level of the relative momentum, exactly it moved again and again to the minimum level. So there is one segment which we talked about is FMCG and the private sector banks. As expected, these moved into the stronger quadrant little here, and even the it lost the auto index has lost the momentum because if you see last week it was little higher on high side, right? So that was declined now, so that it may lose momentum, but it is not a weak thing, but lose momentum, but relative strength will be as it is. So this may come down. So next week, some profit booking may happen in the auto index, and FMCG will be stronger even now. FMCG is very strong. I'll show you why this causing FMCG is very strong now. I'll show next level. So these are the segment which have to segment, and realty index has entered into the improved a lot of momentum more than 100, and at the same time ratio also relative strength ratio also very high into this level. So next week this financial CNX financial means Nifty fin Nifty components as well as the realty stocks will be in focus. They improve their momentum. So what are the stocks to be very strong in that segment, right? So let us see stocks in the Nifty. Look at this. ITC is the strongest momentum had. See here, almost very improved thing, and the Hero Motocorp. Most of them are IT. I sorry, FMCG and automobile sectors on the top side, right? These are all are FMCG and automobile stocks, right? At the same time, there are many stocks into still in the weakening and this quadrant, right? So in the still weakening and lagging quadrant, so this has to improve. If the Nifty wants to move, there should be as many as stocks in these two segments. That means into improving quadrant or lagging quadrant. If a majority of the stocks, that means more than 25 stocks, if they are into the improving or leading quadrant, then automatically Nifty will move higher and higher. So that means many stocks in the Nifty are performing better than the compared to the broader market index Nifty 500 index. This is we are taking a Nifty 500 as a benchmark because it has a combination of small, mid, and large cap stocks. That's the reason I compare Nifty 500 index as a benchmark for the comparing the relative strength into the broader market level. So focus on this FMCG and automobile sector next week. At the same time, we also focus some of the last week I said some of the Dr. Reddy's is I picked up, but unfortunately the stop loss were triggered, but it's still strong. I believe it's still strong. At the same time, I'm not comfortable at this level to recommend more and more stocks. That I'll show you. Now, for the stocks, I strongly believe in stage analysis and one of the greatest setup for the investing. theme. So I'll show the setup now for this level. So this is the setup now. So the stock is called as a Stan Winston's stage analysis segment. This is a about stock which has more than all are above all the key moving averages, and there is a base breakout. At the same time, the Mansfield relative strength is compared to the Nifty 500 index again is higher. So that means above the zero line means it has a better relative strength. At the same time, it has broken out the a base formation, right? So and the key above the key moving average. Importantly, all the moving averages are turned upside, so they are into trending higher. So Abbott is one stock which is looking very good in a weaker market, and at the same time, Britain is another market, another stock which has I missed it actually. I wanted to recommend, but I have some confusion was there, but it was very strongly closed this week. And at the same time, Coromandel, which I discussed in last session, which is also still at a higher. This is a big cup formation, and it is a new high close. If you look at the close price only, not the higher prices, it closes the maximum. This is a lifetime high close. Okay, closing basis method. So, and the relative strength is also higher, and the volume is above the average, right? Volume has picked up for the last 2 weeks. So, on a volume basis, it is very strong stock. At the same time, Dr. Reddy's, which I discussed, formed a base formation. Okay, this entire thing is a base formation which has in a higher lows, which is a uptrend signal, but at the same time, it has formed in a parallel uh, highs. So this is nothing but an ascending triangle basis, and this base has to break. So that means that means this week's high is very critical. So 44.6750 is a high. If it closes next week above this level, it automatically moves higher by almost this level. I'm looking at the 5,000 plus 5,000 levels from here in the Dr. Reddy's. That's the reason I recommended only on the cash levels uh, where I posted that. 1 second, I'll show you that also. uh, this one, yeah. So it will move. This is the ascending triangle base. I'm looking at this level where the minimum target is 46.57, and above that level it also tests the 5,000 plus levels. Okay, that's an my view on Dr. Reddy's. Still, I'm in cash. Disclosure is I've invested in this stock. So the Hero Motocorp is another stock which is very strong, which is also moved just above the prior swings, right? So this is a very strong stock with a better relative strength. 1.73 is a very good relative strength. After a very long downtrend and long underperformance, it has moved above the all key moving averages and closed above the prior swing, prior pivot. So this is another strong stock. At the same time, there is another stock is called from the FMCG space. Look at this bar, very strongest bar. The two heavyweight stocks in the Nifty, ITC and Hindustan Unilever, actually moved the Nifty higher this week. Okay, and it also moved within a volume, right? So this is an ITC within a volume. It is a Hindustan Unilever. These are the two stocks which are in focus even next week also. And the other stock is I am looking at the M&M Finance and M&M. Both stocks are very strong. M&M may form this shooting star formation, but still strong. Any retracement towards the 1,035 is in a good opportunity to buy. But M&M Finance has moved above the prior to 4 highs. Okay, if you draw a trend line from connecting these peak points, it also moved above that break. Okay, so M&M Finance is with a very strong relative strength. It is moving higher and higher. The next thing is another FMC stock, and again it's a Nestle, which is also near to the previous high, but above the all moving averages and with a better relative strength. So this is another stock. Look for this. Any retracement back is a buying opportunity. It may give a buying opportunity. And the PVR is also not a convincing move, but because of the low volume, it is not a very convincing pick now. But look at this stock also. Once the volume is pick up with a breakout here, then it is also a good stock. The another interesting stock is Star, because it's already declined almost 60-70% from the peak, right? So it is forming a base here and just moved about two averages. If at any case it moves above 359, then this automatically this relative strength also improves above the zero line. That's where we are looking to buy the stock. So above 359 360 zone, just watch that zone. It is just another 13-14 rupees away, and just watch this stock for the next week. So these are the stock picks for me. Now I think I have already explained about the relative strength and the Nifty thing. Now I will look some small brief on the some of the sector indices. See, this pharma index is closed higher, above almost 3 weeks down. It is above 3 weeks high. So this is one of the positive sign. And RSI is also above 40 zone, which is also good. IT index, I'm not comfortable because it hasn't closed within the gap area or cleared above the previous week high. That's in a weakness side. So I'm not comfortable on the IT segment next week also. And the Nifty metal still, I don't believe this move, though it formed in a higher high and a higher lows, sorry, higher lows and a higher highs, but it has to clear this 10-week average. Then only I believe in the strong performance by the metal stocks. This is an auto indices which is also cleared very strong. That's what where we have seen all the auto stocks are very strong now. So it cleared almost how many? Almost 2017 high also cleared now. So this is one of the strongest sector which we have to focus for now, which is already discussed even earlier sessions also. And this and then the FMCG also very strong, and the retracement maybe next week it may cross this level. That means another 1,000 point rally we may see in FMCG segment. And the final segment is Nifty 100 index, because this is one of the most focused area in the market now, mid cap stocks. So Nifty mid cap is also higher, filled the gap 3 weeks ago, the gap, and retest almost a good retracement from the previous fall. That means almost above the 23% six for and closed at the 38.2 retracement level. So which is a positive sign. Focus on some of the components in the Nifty 500 index. So these are the major things. But caution, be cautious above the, because dollar index is raising, Nifty showing some exhaustion, and there is no relative performance or relative momentum is not great in the Nifty. So when the benchmark index is not, momentum has lack of the momentum, then we need to be little cautious on the markets, but not bearish, but cautiously optimistic. That's my view on the markets for the next week. Thank you. I think Abhijit is there. Hello.
Yes, sir.
Yeah, Abhijit, you can take now. Thank you.
All right. Good evening, everyone.
Yeah.
I'm sure you can see my screen and you can hear me clear. So, a good thing happened in the market today. In fact, this week, we had a bounce back. And we'll take a look at some short-term levels for both the Nifty and the Bank Nifty. I'm using the TradingView platform here. Nothing much, nothing fancy, some moving averages, RSI, and I use the Heiken Ashi charts quite aggressively for my help of confirmation. So quickly, it's been 3 weeks that the Nifty has managed a bounce back. This bounce back, as of now, we should consider this bounce back as a short-term bounce back in this downtrending market. We've been in a downtrend from the highs of 18th of October last year. And if you want to break down this fall from its highest point to its lowest point, then we were down around 18.5% in 34 bars. I think I was having this discussion last week or early this week with someone when I was saying that the index has corrected more in terms of time in relation to that of price. The downtrending market that we are going through is getting matured more in terms of time. It's probably getting tired in terms of time than price. It had multiple reasons behind it to give us the corrections of this leg and this leg. You had the war, you had crude, you had the inflation. Multiple things supported the negative sentiment towards equity as an asset class. So that has not reversed or changed yet. So there is no need to jump on our seats and feel extremely bullish. From a medium term to long term portfolio point of view, when the index is down 18.5%, when few sectors like IT and metals are down more than 30%, it feels attractive. It looks attractive. The maths looks good. The risk reward point of view also looks good. Nifty PE down, I think, came down to almost 19.5. So medium to long term point of view from this quarter, July, August, September, I think one should do their homework really well and can look into buying into those stocks. If you're uncomfortable with stocks, go with the ETFs of the fund. But my discussion will be more from a trading point of view. So I'll restrict myself to the short-term view. So a 3-week bounce back in this downtrending market is good. I'm not questioning that. But let's take a closer look and find out that every time in this fall the index had bounced back, what was the size of these bounce back, both in terms of time and price. So this particular bounce back that we had lasted for around, on a low to high basis, it's giving me 3 weeks. This is a weekly chart. Around 12% bounce back we had. This would be a little encouraging. This would be 16% in 4 weeks. This would be not much on a low to high basis, around 6.8%. And the recent one is around 7%. So 7% is what we are dealing with now, 8% the previous one, 16% was the one before that, and the one before that was 12%. So we don't have much of a pattern here. We do not have much of a pattern here, apart from the fact that if you notice, most of the bounce back weeks lasted for 3 weeks. This was an exception of 1, 2, 3, 4, 5. So this was a 3-week bounce back. This was a 3-week bounce back. As of now, we are on 3 weeks. This was a 5-week bounce back. So the short-term movement that we've had right now, 3 weeks bounce back, has reached a stage where in terms of time, we should be a little, okay, not bad. Now let's be a little careful. We will go to the daily chart and see what kind of levels we should look at. We should be a little careful because we don't have a very convincing reversal yet. Stocks like Reliance Industries is still under the shadows for sure. Yes, the banks have participated. Yes, the IT has also pitched in its part. Today, Larson's move was phenomenal. So there's no doubt that the move is good, but we are not yet back to the kind of market where everything is fine. No, I think crude has bounced back above 100. Let's take a quick look at crude and we'll come back to Nifty. This is a weekly chart of crude. I would like to focus more on the daily chart of crude. And this is the daily chart of crude where we can see that after the big, reversal on the downside, now it's giving us a bounce back and it's hovering above that. 100 is a very important psychological level for crude. So we should not forget this. Dollar, of course, is hovering here at 79.3, and it is on the verge of creating multiple divergences now, which may lead to a little bit of ease off. But as I said some time back, and I'll repeat once more, yes, the move is encouraging. Yes, we had some good chance of buying and making money in the long side of the market last couple of weeks. But considering we have a range expansion, it's a range expansion bar, we should be a little careful next week. We should continue the bullish bias, but the prudent approach would be a slightly cautious. We should not be looking to go contra short right now. So levels. For levels, let's come down. Now that we have created our view, for levels, let's come down to the daily time frame. And we can see that the index with this move up has managed to close this gap pretty fine. And this volume profile of this fall clearly reflected a majority of the volume happened down here, wherein close to this level, the index had faced this resistance Now it has taken it out quite convincingly. After taking it out, it did not actually slip down. It has clearly moved up for the last 3 days. So the uh, the confidence is there in the price. Now going back to this volume profile, the next level of volumes that that this range provides us is at this zone, which is close to that 16,350, 16,500 kind of a level. In fact, this level is a pretty interesting one because I can see some lows, some highs. So from a short-term point of view, I think this move has the potential towards 16,400, 500. Is it going to go immediately? Unlikely, because if you drop down to lower time frames, you'll find a steadily rising market, quite stretched. And so it might, towards the first half of next week, might consolidate, but attempt will be towards 16,400. And this is the reason I would suggest keep a cautiously bullish stance, right? But do not haste and do not chase any stock. Look for good trending stocks which has given us a move. State Bank, iBank, as I said, Larsen gave a very good move. HDFC Bank, Tata Motors, HDFC. Within the IT, you can look at Infosys. I primarily focus on the top 15, 16 names from a short-term trading point of view. So most of the names that come out from my mouth will be primarily large cap. And there are a few mid-cap stocks I'm going to talk about today as well. So go for those stocks. Do not try to buy a Reliance Industries. Do not try and attempt to buy a Reliance Industries or go long just because of the fact that Reliance is relatively cheap, just because of the fact it is close to supports. But go with those horses which have participated in this run up, right? So work on that. I think that will be more important. Going back to the Nifty now, on the downside, if it comes down, if it corrects, I'm now going back to a smaller time frame, which is 75-minute time frame. Now we can see here that to a lot of extent, the index did manage to spend some time at this zone, which is very close to these highs, and there was a little bit of hiccup here. So this particular wide zone here, which is sub 16K, 15,900, 850. So 16K, of course, will be a psychological afford kind of a level that the bulls would like to hold on to it. They won't want 16K to go away. It will be a psychological loss. So 16K, of course, is the by default support. I think if you take a look at the option chains, I'm sure majority of the put writing might have shifted to 16K now. But yeah, 16K to 15,900 should be the support. We've had disappointment in the past. We've had disappointment in the past wherein index turns up but fails, tries to turn up, scares us, and now it has to. So a typical downtrending market, when it reverses, there are multiple hiccups, and these are the hiccups. Hopefully, we will not have any hiccup this time. The hiccup will happen only if it slips below 16K, maybe 15,900, 16K is the range we should use. As long as 16K, 15,900 holds next week, your strategy for a week ahead should be cautiously bullish. Now, you have 300 points on the downside for support. You have 250, 300 points upside for the target or resistance. So you understand where we are. We might be midway of this move of what can happen in the next couple of weeks. And that's why I'm suggesting do not chase. Look for better buying opportunities on dips. So Nifty level and view is clear. Bank Nifty has participated. Bank Nifty has led the move. If you take a look at the daily chart of Bank Nifty, you'll see the extent of the move. Now, we'll come back to the daily chart. If you look at the weekly chart of Bank Nifty, you will see the kind of analysis that we did, this bounce back, this and this and this. You'll notice that very, very similar looking behavior here as well from the Bank Nifty, which is fine. 37% weightage from this pocket is, of course, reflects a lot on the overall markets. But this index has gained really well to come back close to its previous swing high. So maybe if the banks find themselves tired, and if the index has to sustain, let's say the Bank Nifty is up, the intraday charts of Bank Nifty clearly reflects that it had a great run and it might be stretched. And if it gets tired next week, and if the Nifty does not want to come down, then which are the pockets of the market which can help? We saw that a classic case today was Larsen. There was nothing much in the market in today's trade. From a short-term trading point of view, there was nothing actually there. A little bit of movement in the later half came from ICICI Bank. Infosys moved in the morning, then it slipped a little bit. HDFC slipped in the morning, bounced back later in the afternoon. Tata Motors extended the move. So apart from Tata Motors and Larsen, amongst the top stocks, okay, please understand, I'm talking only within the top 15, 16 names. There was nothing much. So these kind of picks we have to identify. They did not come from the banking per se. There can be a movement, a breakout that might come from Infosys. Maruti can give us a bounce back after it fell because it's clearly created a divergence and it had a great run, right? It was one of the stocks which did. So keep a close look within the Nifty 50, top 15, 20 stocks. कि अगर बाजार को नीचे नहीं आना है, the index doesn't want to come down below 16K. You know something called index management, right? कहीं ना कहीं से, from somewhere or the other, some stocks will come up and support the index. Now, I might ask, why not Reliance? Reliance is a classic blue chip, classic blue-eyed boy of the market, which always performs in these kind of environments. Now, I generally do not like to bet on a stock which is underperformed. I don't mind waiting for a good opportunity from a trending counter. And so I would say shy away from Reliance for the time being, because the markets moved, the bank Nifty moved, but Reliance did not participate at all in this, at all, no sign. In fact, if the market comes down, I think Reliance will fall. So that's the view on the Nifty and the bank Nifty. Cautiously bullish, number one. I am probably midway from wherein I can see 300 points, 250 to 300 points on the upside and 2 to 250 points on the downside. So maybe in this 600 points, 500 to 600 points of swing, I am midway right now, 16,225. I had a good breakout. I had a follow through gap up kind of opening. Intraday I slipped, but anyways, the momentum was good. It was a resilient market. Buying opportunities were there. So let's see, with this in view, next week we should open our trading account with a prudently, cautiously bullish approach, which will be a prudent way to do that. Now, amongst the top stocks that have moved really well, I like the way Tata Motors have given us a move. I had a call on Tata Motors this week itself. But this move is phenomenal. Any kind of intraday dip on Tata Motors, any kind of short term, because I'm not going to chase at 443. Any kind of short term correction on the way down would be a nice opportunity. Larsen also has kind of, with the move that has come in the last 2 days, is clearly made a statement that I'm here for the trend reversal for sure. And so Larsen can be another opportunity, but please understand all these will be opportunities that you should find from lower time frames, which will give you a short-term correction. Now, after a long time, we have seen the way ITC has moved over the last couple of quarters. Beautiful move. Hindustan Unilever also has given us wonderful moves. From those who trade the daily time frames, these are your ideal charts. Something like Hindustan Unilever, you'll find a nice divergence. I'm sure if I bring in the RSI, there'll be a divergence. And so previous highs from where it gave you the breakout is somewhere here, 2400. If you want to break down and understand that what happened to the volumes in this particular bounce back, then volume profile clearly reflects that this is where the majority of the volumes have happened. That's quite a distance from the current price. But previous highs, I think, would be important. That's close to 2400. When the level comes as a round number, right, in the Sun Unilever 2400, never put an order at 2400. मुझे नहीं लगता वो कभी आता है. You should start looking at it from 2420, 2425. Whenever you think that there's an important support or resistance, which comes to a round number, 2400, 2000, 100, then generally I have noticed in my experience that it doesn't come down or go up to that particular round number. I don't know if it happened with you. Do share your thoughts about it. So अगर 2400 निकल के आता है चार्ट से, I'll start to look at 2420, 2425 में alert लगा के रखेंगे. We'll put an alert at 2425 and we'll keep a close look at it. Now, what about IT? Let me take a look at the sectoral indices. And I mark them. These colors are essentially markings of short-term trend based on the daily chart. The daily chart which provides us the trend, the short-term trend. And greens, of course, is uptrend. Red, of course, is downtrend. And blue, the small cap, is neither an uptrend or downtrend. It's on the verge of a reversal. Crude has moved into a downtrend based on the daily chart. Dollar is still very strong. It's up 79 point almost 3, and gold is underperforming big time. It's come down to 1739. Now you can see very clearly here, metals, IT, public sector enterprise, infra, and energy. Energy is primarily weighted down because of Reliance Industries, but it's IT and metals which are trying to give you a trend reversal. Significant corrections has come in from both these pockets, and I think value pickers, valuation wise, more comfort will come in the IT pack, especially stocks like ITC, Infosys and TCS. But IT, if you look at CNX IT, has the potential even next week to give you a breakout. Maybe. Let's take a look at the weekly chart of CNX IT. And I can see that after this correction, if you take a look at RSIs, you'll always find divergences. I know if I bring in the RSI, it will bring in divergence. You know, after a certain amount of experience, you don't even need to look at the indicator. You know where the divergence pile up. So IT is the bounce back, the little bounce back that we've had in IT so far is not from a bad zone. Maybe in the near future, it can come down a little bit and create a base formation. Maybe, who knows? But so far, so good. And if I come down to the daily time frame, what I notice, okay, if you go back to the weekly time frame, what you will notice is 3 weeks back, this was an inside bar, correct? Inside bar. And it was last week that it made a higher high and a higher low on a week-on-week basis. This was the first sign. This is the first sign of a prospective reversal of strength. If I break this down for you, you take a look at from this point to this point, the fall of CNX. You'll notice continuous lower highs and lower lows, continuous, till this red bar. All of a sudden, it was a crazy bounce back, and it made a higher high, higher low. The very next week, it makes a lower low, lower high, and it comes down. Fine. So it's been after a very long time that the index makes an inside bar, creates an higher high, higher low, and then creates another inside bar. Now, these inside bars are essentially signs of contractions, range contraction, which generally leads to a longer size bar. इसका मतलब ये है that from IT, ideally, we should, not ideally, we are going to probably look at a longer high ranged bar, either on the upside or on the downside. It's a contraction. So now let's go to the daily time frame. When you bring your attention to the daily time frame, you see that, okay, this was the reversal. This was the first correction after the reversal, and now it's trying to move. This gives you the feeling of, oh, pattern traders, I think we'll call this cup and handle. Yeah, that kind of a behavior. You might then start to, is this a left shoulder? Is this a head? I'm not getting into patterns, they're fairly subjective. But what I can clearly see is bounce back, short-term correction, not falling deep enough, and signs of a revival. So in case we get a move from Infosys, HCLTech, TCS, then you have a chance, or I'll go to the top stocks, and over here I have Infosys, had a pretty good move, and it's in a short-term uptrend. This guy is dealing with this level. These are important resistances for Infosys, by the way. Yes, they are. TCS. So you have a move up. This is a short-term correction. Do we get a move above this? So you can put an alert at 33.20. HCLTech, I was eyeing this stock for a prospective long trade today, but it's not delivered. It's yet to take out these highs. So there's a breakout possibility, a short-term breakout possibility in IT stocks. So if the banks slow down, 1, if the index doesn't come down below 16K, 2, then from where will I get the support? So keep an eye on these stocks, keep an alert, set an alert, and let's see whether support comes in from IT or not. Now, if you're, of course, you've been following, I hope so, you've been following the stocks that I've started to share this week in our StockEdge social. I'm going to quickly talk about a couple of them. And I think Tata Elxsi was one stock that I shared. And what I see in Tata Elxsi, I think I've clearly discussed this in my video yesterday. And this needs a breakout. This guy needs a breakout, 8200. It's a fantastic trend. It has been a fantastic trending counter. There's no doubt about it. But I did discuss in my video that how on a weekly chart it has made a lower high after long. If you're not seeing the video, you can go to my YouTube channel. You can check that. You will find it very easily. Just type in my name, Abhijit Paul, and you will be able to see. If I can show you the video, in case you have not seen it, it will be easier for you to find it. Just come to my YouTube channel, which is over here, and as you scroll down to Indian financial market analysis, over here you will find a couple of videos. The last one was Indian Bank yesterday and Tata Elxsi. So if you need detailed analysis, it is shared in that video. Tata Elxsi is one stock which is a breakout candidate, either up or down. It's make or break for this stock for sure. Indian Bank was particularly caught my attention because the way it was basing out and it's showing strength. 2 days it has given fantastic movement. I think I set out the trade at 154.55, if I'm not mistaken, yesterday, and it has given us a nice short-term breakout. It's got a prospective breakout from 2 layers. So if you followed the video, you would know the first breakout I was eyeing this one, based on which the trade was given, and the bigger breakout is this one, 168, 169. If that happens, the weekly charts opens up. If the weekly charts open up, and you can see it's a turnaround story. It's essentially an underperforming stock. Okay, now it is outperforming, and so the weekly charts clearly shows you this range bound activity. These kind of range bound activity, when they offer you a breakout, generally opens up significant upsides. And even if you go by just stupid calculation, nothing much, whatever range it was stuck, generally it opens up the same amount of range. Generally, there's nothing fancy about it. You'll find a 220 kind of levels, which I think will be very easy for Indian Bank if and only if the breakout actually comes. Dixon was another stock which I found out it gave a move, and today I think it has corrected that move. It has created what I call as a decoy bar, and yes, it's called it's an outside bar. It's not a decoy bar, and this is the breakout that we need. Again, similar kind of a behavior. Short-term trend has just moved on the upside after a long time, and we need a follow-through movement. So there are stocks, there are movements within the market, within various pockets. So, the way I see this, and I think I was discussing this with Suchi, Rumta, or Vivek, I think last week, is that we all come to the market to test our skills, talent, and make some money. There's whoever comes with a crore portfolio capital or 10,000 capital, the underlying objective is the same, right? But what we all need to understand, and it's extremely important, that what we trade, where we trade, the overall markets, it changes its nature, the dynamics of the market. How was the IT sector performing 4 quarters back, and what it is doing right now, right? The way you used to look at IT then and the way you used to look at IT now has changed. So first and foremost, we need to understand this change and adapt, and we are very good at it. We humans are extremely good at this part, at least, that is to adapt. So what I'm saying is, right now, the kind of markets where we are right now, 18.5% down, correction. There was a war looming, and no one's talking about the war nowadays so much, but still, crude, inflation. So macroeconomic parameters are against equity as an asset class. Every asset class has its turn. Apna time aayega, or in slightly loose words, every dog has its day. The same thing, and if I say it in Hindi, may not sound so good, but still. So every asset class has its time, every sector has its time, every trader has its time, every investor will also have its time. You will see the Mahindras going up, The Adanis are going up for the last 7 and 8 years. Before that, after that, maybe the Tatas have. So yeah, it's cyclical. So the markets, where we are today, you and me, you see this Nifty, you see, you know the crude, you know the gold, you know the overall macroeconomic parameters. You don't need me to tell you all this. So if I ask you a simple question, is Mahol mein, in this kind of conditions, do you think it is easy to trade and make money? I don't think so. I think negative. I think it's relatively difficult. And the difficulty comes from choppiness, or जिसको fancy way में बोला जाता है volatility. If you're new to the market, if you have been relatively new to the market and entered the market last 6 months or 8 months, I'm sure it was not a good experience for you. आपको कुछ समझ में नहीं आ रहा कि हाँ हो क्या है, and you might have a very bad experience. You can share your thoughts with me. So you have to wait. You have to wait for the right time, the better time to come. And when the better times comes, you will see with the very less effort, you can get good returns. And when the times are not good, you put in larger amount of effort, still getting a small return is getting so difficult, right? At times, you need to know when to slow down. And at times, you know when to change your gears. It's very, very similar to if you're from any of the unnecessarily busy, bustling cities of our country. It's very similar to when you drive, right? You cannot drive in all the lanes in 4th gear at 60 or 70. You can't. So please keep this in mind, that is this the market to drive in the 1st gear, 2nd gear, 3rd gear, or 4th gear, or whatever. That is, go aggressive or use two very nice words. Should I go defensive or should I go offensive? Should I play offense or should I play defense? I think it is still time we continue to play defense. If we make decent returns, it's fine. Remember, it's equity. It's not commodity, currency, or any other asset class. Equity is inherently upward looking. So you will get a reversal. You will get a new high. You will get a bull market. You'll forget all this behind you after 6, 9 months or 12 months. ये सब आपके पीछे होगा. You need to prepare yourself for that. Before I sign off, there's another important sector, which is the metals, which had a very sharp fall. Now, relatively between IT and metals, I feel that it is IT which will be more attractive to the value guys. See, institution moves the market, right? So when both the sectors are down over 30%, in relative terms, I feel it will be IT which will find more attractiveness in relation to metals. This is my view, and markets always prove us right and wrong, so I'm open to both of them. But I'm not too keen on eyeing the metals right now to participate, and most of the stocks have not come in my radar also. IT has predominantly come on my watch list more, and so I'm going to shy off from metal right now. I don't hesitate to do an intraday trade. In fact, I was looking at Tata Steel today. I remember very clearly I was eyeing Tata Steel. So I don't mind trading intraday or getting it today and selling it off tomorrow. That kind of trade is fine. But if you ask me whether this is a good time and price for the metals, like IT has given a move, will it? I would suggest give it a little bit of time. A strong downtrend, indeed. Will we get a bounce back? Yes, we will. But I think I need a little bit of more supporting evidence from the metals before I get myself into it. So amongst the contrarian bets, it's more from an IT point of view. Amongst the trend following point of view, it will be auto. I think anyone you talk to will talk good about auto. There's no doubt about it. Relative strength analysis will tell you auto is good. Performance, auto is good. All-time high, 52 weeks high, auto is there. So that pocket of the market who believes the trend will continue, auto is there. But I'm not going to chase it. I'll rather find it at lower price. I would stick my neck out and go with something like Tata Motors, which has just given us a move. And then there's the private sector banks and PSU banks. So mauka milega, just do your homework well. Please do not chase. This is not a bull market कि आप जो भी खरीदेंगे 2 दिन बाद वो ऊपर ही मिलेगा. बिल्कुल नहीं. Overnight risk रहेगा. Whatever happens in the West will have an impact next day morning. So उसको ध्यान रख के you trade accordingly. Keep a keep a low profile, थोड़ा defensive खेलिए, offensive short term intraday में खेलिए, overnight position ज़्यादा carry मत कीजिए, and let's wear this out. It as they say, this will also pass, right? So ये phase भी निकलेगा, but निकलने के पहले whether it will give us a further correction or not, that time will tell us. Leave it to the price. We will do our job, right? So with this, I'll sign off. If you have any doubts, or you can watch the video, as I said in my YouTube channel, the Indian Bank video, I think you will like. If you have any doubts, you can connect with me via StockEdge Social is the best platform. I think every one of you are there. I'll be very happy to share out my views and comments on your doubts. Right? Thank you. Enjoy your weekend ahead. Take care of yourselves. Next week, give your best and trade well. Thank you, everyone. Good night.